will get our attention. And I know all 5 of us are looking at our sources to try to get as much information as possible. And we will get these results as soon as we can right here.
Do you mean refreshing X constantly to see if anybody posted?
Yeah, pretty much. Pretty much. Pretty much. I also have my own personal source that I know he's on it, and he'll message me as soon as he sees anything. So once I get his message, if I don't see it first, then we should have text him.
I'm going to text him. Make sure he texts me first.
Meta, we got a green candle.
The red candle.
See how green Microsoft. She can go. 685, 2%, 2.7.
Microsoft down, bro. 4% down.
Yeah, Meta just went down. Oh boy, that flipped so quick. Microsoft down 4, Meta down 2. Meta just went from up 4 to down 2. I don't trust Meta yet. Now Meta looks like it wants to go flat. Microsoft, ugly 4% down.
Damn, that one looks bad. Yeah.
Ugly 460, 5% down. Meta now flips green again. Meta's being a little agitated. She's flipping between red and green, back and forth. Tesla also flat. IBM flat. ServiceNow up 1%. Lam Research flat. Meta and Microsoft, it looks like they want to dump.
Even Amazon's down 1.4%.
I'll put Amazon on this list as well. It had to be cloud, right?
Microsoft, did you say the EPS and everything already?
No, you got it. Go for it.
EPS was $4.14 above expectations of $3.92, beat by 6%. Revenue was 81.2 billion, a beat by 1%. Expectations were 80.2, so beat by $1 billion. EPS was up 28% year over year, and revenue was up 17% year over year, down 6% in the markets right now.
Those are phenomenal numbers. Something has to be off with guidance. Meta ad revenue 58 billion versus 56.7. That's a beat. 59.8 billion total revenue versus 58.4. That's a beat. EPS 888 versus 802. That is a massive beat. Meta right here down 2%. It was down 5% at one point. Meta touched 644.
Dude, Microsoft's down 7.5%.
What the hell did they?
Are you guys buying? This must be a CapEx problem.
What? It doesn't.
Did they say?
It doesn't matter. It doesn't. There's no guidance in the report.
Yeah. Oh yeah, I forgot.
Yeah, they don't tell you until the call.
What the hell did? What happened? I'll try to get some details on that. Meta massive double beat. Not sure what the streets upset.
I think this is a CapEx thing. Nvidia's slightly up.
Yeah, this makes no. How is Nvidia? Amazon being down means cloud had to disappoint. Microsoft's second quarter Azure and other cloud revenue ex foreign exchange is 38% up year over year. The street estimated 38%. Oh wow, Meta capex 115 billion.
Damn,
to 135. They gave a range.
Let's freaking go.
Why the hell are they spending 140 billion dollars?
Because AI, Amit. That's all you need to know.
Yeah.
AI. Stop looking into it, okay?
Dog, what are they doing? I mean, I hope Zucks can explain. That's why Meta's down 3% right now. He can fix this on the call.
Man.
He can fix this on the call.
Yeah.
Jose, your take. Go ahead.
Meta needs it. I mean, they're going to say their core business can grow still with this type of AI investment, but the street just hates it. It hates it. It hates that big number. But I mean, we saw them beat in revenue number. They gave a nice guidance. I saw the guidance already beat expectations. The reason is the AI infrastructure space is paying out. So why not just keep going if it keeps paying for them?
Okay, but
it's not being used on the metaverse. It's not being used like if you're thinking about using on Llama, their AI infrastructure, maybe 10% of that gets used for their AI labs. The other crazy amount gets used for their core business. That should just be drilled in everybody's head. The core business is what uses that AI infrastructure.
Well,
honestly, this is a phenomenal quarter by Meta. Have you guys been looking through these numbers?
No, go ahead. What are you seeing here?
It's crazy.
Members are up 7% year over year to 3.6 billion essentially. Their ad impressions delivered across the family of apps increased by 18% year over year for the fourth quarter and 12% year over year for the full year of 2025. Average price per ad went up by 6% quarter over quarter. From fourth quarter to fourth quarter, and up 9% from the full year of 2025.
Tanner, I got to stop you real quick to do Tesla.
Yeah.
Tesla EPS 50 cents versus 45. That's a miss. Revenue 24.9 billion versus 24.7. That's a beat. And adjusted EPS again 50 cents versus 45. Tesla flat. Down 0.5%. Nothing.
I'm buying Meta and Amazon Microsoft right now.
No, Amazon is the correct answer, of course.
Yeah, I mean, you're not wrong. I'm not anti that.
7% on Microsoft just feels like there's something going on. Let me get a little bit of coverage. It feels like a lot. Let's get a little bit of coverage on Meta. And then we'll keep going from there.
Versus estimates $8.23. Revenues of $59.89 billion, showing 24% revenue growth. That's actually an acceleration from the third quarter pace of growth. Analysts had been expecting it to dip slightly and coming in ahead of estimates of $58.59 billion. The key number here is CapEx. The company guiding to CapEx for the full year of 2026 in a range of $115 to $135 billion. That is ahead of estimates of about $110 billion. They say this year-over-year growth is driven by increased investment to support our Meta Superintelligence Labs efforts and our core business. And they said, despite the meaningful step up in infrastructure investment in 2026, we expect to deliver operating income that is above 2025 operating income. We're going to continue to dig into these numbers. We'll be back to you with more, Melissa.
Okay, so CapEx.
This is Microsoft.
The bottom line, but we're still watching the stock drop about 6.5% here. Let me give you what we have so far. EPS is $4.14 adjusted. That's a beat over $3.97 expected. Revenue, another beat here, just by about $1 billion, $81.27 billion. Street wanted to see $80.27 billion instead. And then we got Azure Cloud growth. That was right in line at 39%. Now, there's a lot in here, Melissa, related to OpenAI, that recapitalization that happened in October, and some other accounting stuff that could be why we're seeing a drag on the stock. I'm going to dig into these numbers. There's going to be a lot more to share with you in a few minutes. So I'll be
Tesla flips green, and so does Meta. Again, Meta looked like they had a pretty damn good quarter. Tesla 4%, baby.
Tesla is going to acquire $2 billion of preferred stock in XAI.
Whoa!
Oh wow, a little late, but nice.
Yeah, a little late.
Yeah.
Oh
a little
my
late.
goodness!
Still cool.
There you go.
Hold on, that's a big deal. That's not a joke. So finally, Tesla shareholders own a piece of XAI, $2 billion at probably like 150 billion or 200 billion valuation, but still, and that's pretty damn aggressive. And I think it's what people have been waiting for. All right, Tesla numbers. Let me see if I can pull those up, and we'll get deeper into this as well. Okay, so let's pull up Tesla real quick. I'm sure the guys are going to be running through these Microsoft Meta numbers. We'll get some more analysis on that, but let's pull this up. 4.8 billion GAAP operating income in 2025, 1.5 billion in Q4. Here's the summary. 2025 marked a critical year for Tesla as we further expanded our mission and continued our transition from hardware-centric business to a physical AI company. We laid the foundation for the future of Tesla as we advanced FSD, launched our robotaxi service, began installing production lines for Cybercab, and fine-tuned our production-primed Optimus design. Our approach to AV and humanoid robots mirrors the way we approached EV and energy storage at the system level, where we identify the limiting factor and develop bespoke and scalable solutions to optimize for cost, functionality, efficiency, and safety. In 2025, we completed the refresh of our vehicle lineup with the launch of the new Model Y, including additional variants. We believe that maintaining an optimized and efficient product portfolio and a continued focus on high-value features such as long-range, best-in-class software and autonomy is the correct strategy to win. In 2026, we will further invest in the infrastructure needed to support clean energy, autonomous robots, including the ramp up of 6 new production lines across vehicles, robots, energy storage, and battery manufacturing, while further leveraging our existing factory, charging, and service center footprint to support future growth. Revenue is down 3% year over year. Autos are down 11% year over year. Energy is up 25% year over year. Services up 18% year over year. Gross profit is up 20% year over year. Operating margins are down 50 bips year over year. And then income from operations down about 11% year over year. Adjusted EBITDA is also down about 4% year over year. Neil, any quick reaction to Tesla numbers?
Wait, let me scroll through the presentation. But I mean, so far, better than expected, I would say. Plus that $2 billion XAI news is very welcome. Very late, but I guess better late than never. I do wonder how we'll get rewarded with the SpaceX IPO, but I guess we'll have to wait a couple of months to find out what happens with that.
Meta has gone green. Tanner, go ahead.
I was just going to say I bought the dips on Microsoft and Meta, and they're already turning green. So
Thank you, Tanner. I appreciate you.
yeah, you're welcome. Yeah, it was mine. It was me.
Well, Meta wants 700. She's $4 away, baby. Ad impressions, 18%. Average price per ad, 9%. Revenue, almost 60 billion. Expenses, 35 billion. They bought back 26 billion of their stock. Again, it's hard to bet against these large caps. They're buying back so much of their stock. Long-term debt, 58 billion. That's because the data centers. Cash flows at 36 billion. Headcount, 78,000 people, up about 6% year over year. We expect first quarter revenue to be 53 to 56 billion, 698 on Meta. Expenses, 162 to 169, which obviously includes that massive CapEx spend. Tanner, any thoughts now that you've had a couple minutes to think about it of this increased CapEx?
I was never bearish. I like it. I think that it's so funny that the stock sold off so quickly on that news. Like, why do you think he tweeted out this Meta compute thing? He was trying to, let people know there's going to continue to be an increase. So stop crying because it's only going to get worse. I've been saying this for a long time. Like, the train's not done. A bunch of people saying that we're, all the infrastructure names. Jose is the only person that's understood. He's the only guy that understands what the chip happened. Okay. Bunch of more companies need to buy more chips. AI is real. This is not a fad. Meta understands this. Zuckerberg's 42. You want to bet against this guy for the next 30 years of him operating this business? No way, Jose.
Well, if anyone took the Meta earnings bullish view, you're up 4% right here. Just touch 700, 697. If Zucks can deliver a good call, I don't see why we can't break through 700 after hours and hold it. 697 right here on Meta. Jose, your reaction to the CapEx spend. Before you do that, ServiceNow, they beat by 6% on EPS, beat by 15% on revenue. That stock is flat after hours.
It was up 4% and just keeps on going everywhere.
Yeah, hit 140.
The market remembered it was a software name, so it's like, oh,
Yeah,
it's like we can't get.
yeah. It's like, wait, hold on a second. Where are you going, baby?
Yeah, Jose.
But yeah, CapEx for Meta, I mean, not scary. Core business still does well with this. I wonder if, like Tanner mentioned, Microsoft could be selling off if Meta is increasing. It's safe to assume at least the other players are going to increase. So I wonder if Microsoft is just having this scared off of the CapEx. Earnings comes, Microsoft is going to say, look, we're increasing our CapEx because we are compute constrained. That's it. It's easy. If we had more compute, we would be growing at larger revenue. So for Microsoft, I'm going to be paying attention how their RPO has increased, how their cloud business has increased, and kind of the commentary that they share there with the shortage. So I didn't do the Meta buy, but I'm here looking at Microsoft right now during this dip.
Let's get a little bit more coverage on Microsoft here.
Back in a jiffy with all of that, but right now we see the stock down 7% on these top and bottom lines.
All right.
That was the previous one. I'll get the new ones up. Neil, you're going through these Microsoft numbers. I mean, does anyone also in the chat, does anyone have a reason why, real quick, Robinhood is said to vie for key retail role in mega SpaceX IPO? Okay, good for Hood. I mean,
Gotta love Robinhood.
Is Hood up right now after hours on this? Yeah, Hood's up 2%. If they can get us the SpaceX IPO, get a big retail allocation, they'll be very bullish.
You'll get half a share, maybe.
No. I think this is, hopefully more.
Technically, I have, I think, half a share or a quarter of the fractional shares that they gave out when they announced something, their fractional token stuff in Europe a while ago. But from Meta, I mean, again, disregarding the spending for a bit, the core business is just firing on all cylinders. That's just insane. So if they feel they need to increase spending, well, I mean, why not? Why not? As for the Neo Cloud players, just looked at them. Most of them are, I mean, Applied Digital, Iron, Hut 8, Cypher, they're red. Nebus is flat. CoreWeave is up 0.5. Core Scientific is up 0.7, so not much of a movement there. As for Tesla, I see that they will maybe launch robotaxis in Dallas, Houston, Phoenix, Miami, Orlando, Tampa, and Las Vegas in the first half of 2026. So definitely ramping up the robotaxi coverage in 2026. As for Microsoft, I still, I don't know. I'm still
Neil, did you
scratching
see
my head.
the RPO number? Remaining performance obligations of 625 billion for Microsoft.
Yeah, but is it the same RPO as an Oracle, where it's like maybe for the next 8 years backed by OpenAI that maybe doesn't have the money?
I hope not.
Because I remember last time, I mean, that would be massive because I think they had about 200 and something last quarter. I don't know why that massive growth, unless they have two different RPO numbers that they like to share. I think Neil mentioned something really interesting, that the Neo clouds are actually down. And we know Meta is actually a big customer of Neo cloud players. So shouldn't their CapEx increase also mean that they're going to go play with other Neo clouds? I think Meta does both. They have a partnership with Nebius,
Yeah.
and I think they have one with CoreWeave as well. If I
Yep, you're right.
if I remember correctly, so it's like CapEx growth. Doesn't this mean they're most likely going to be working on more deals with those players as well?
Yes.
Unless the street thinks, Tanner, you can say if you agree with this, the street thinks Meta is going to take Nebius's lunch, Iran's lunch. Do you think that's the argument here?
No, I don't think that. I just think there's so much compute to go around. Well, sorry, there's so much need for compute to go around that they're trying to essentially diversify, build their own data centers, work with CoreWeave. I think the deal is about a $12 billion deal with CoreWeave, $3 billion deal with Nebius. And by the way, the only reason why it was a $3 billion deal with Nebius is because Nebius had to essentially cut them off. They were like, we just can't continue to offer this much. Like, we just don't even have the supply.
That's already fulfilled too. So they fulfilled them with existing compute.
Right.
And they're already sold out.
Yeah.
Let's get a little more coverage on Microsoft. Maybe we can find out why this RPO is so high.
Is the same kind of RPO that when we talked about Oracle months ago that everyone was getting excited about. Microsoft now saying they're expecting a huge increase in that, likely OpenAI playing into that. CapEx for the quarter. Now, remember, they did not give us guidance on this. It ended up being $37.5 billion last quarter in capital expenditures. That's up 66% from the previous quarter. We just see Microsoft accelerating their spend on capital expenditures because we keep hearing again and again that they just don't have the infrastructure to meet the demand. Also, another highlight here, Microsoft commercial cloud revenue. They're crediting Copilot behind that growth, revenue up 17% there. So a lot of OpenAI stuff going on in here. Microsoft obviously has to disclose that because of their huge stake in the company. But that RPO number is something people are going to be paying attention to and talking about a lot in the call now.
I think that's the biggest question today. Where the hell did they get $300 billion of RPO? It sounds like OpenAI, but hopefully it's more legit than not.
Because the other thing, they did announce a deal with Anthropic this past quarter, the Anthropic and NVIDIA deal. So that could be part of it. And we did see yesterday that Anthropic raised their fiscal year 2026 guidance by 20%. And then for 2027 also looks strong. So I'm hoping we hear a little bit more about that diversification away from OpenAI.
IBM, 9% after hours. They're the winners right now. They beat by 5% on EPS. They beat by 2% on revenue. Not sure what they said to get the street this excited, but the street's excited. And then Celestica, earnings growth of 70% year over year, crushed EPS. Revenues up 44% year over year. That stock was one of the best performing stocks last year, but it's down 0.5% after hours.
And Microsoft is only down 4.4% right now. I remember there were quarters where the stock was down 5%, and then the earning call happened, and suddenly it flipped green. But yeah, I mean, the RPO is probably a mix of OpenAI, Anthropic as well, as Jose said, and maybe someone else. I don't know. Maybe Grok. Who knows?
So can I add one more ticker to your list for today's earnings?
Real quick before you do, OpenAI is building a social network and is looking to use Sam Altman's WorldCoin orbs for human verification. That ticker is up 22% after hours. Is this why SoftBank is giving them another 50 billion for a social network? Go ahead, Tanner.
Yeah, 30 billion. Yeah.
WeWork.
Lending Club. This should be another name for the day. They just showed off earnings. It actually doesn't look bad. I'm only skimming the beginning. They increased guidance, revenue, and EPS all beat. Stock is down roughly 9.5%.
Why do you think they're down?
I'm not sure yet. I'm trying to go through. A lot of people compare this name to SoFi, but it truly, in the last probably 18 months, has not been correlated to SoFi at all. And in the same quarter, this company can put up terrible earnings and SoFi can really show off great numbers. But I'm going to look into it for a second and see if I can find anything.
Reminds me of a lot of other companies out there. Snapchat versus Google and Meta.
Yeah. Imagine
Commvault
looking at
and Rubrik.
Snapchat. You look at Snapchat and say that the advertising advertising business is down. It's like, it's not a great look.
Robinhood up after hours on this potential SpaceX allocation. Palantir right there up about 1% after hours. Again, Microsoft, which took the biggest hit. I think if Nadella clarifies that the RPO is not Fugazi and not just OpenAI, I think that stock could make a run back after hours. Now it's only down 4%. It was down 7%. Google should be pumping as well, right? Google 338, very close to 340 all-time highs. Amazon was down. Amazon still flat. And then NVIDIA seems to be the biggest beneficiary of all this CapEx.
Curious, I know Lam Research also reported, are they moving anything today?
That's a good question.
And
No, not much.
not much? Okay. And then there are discussions that Meta's going to buy some MI 450s from AMD. Is AMD moving on the CapEx growth here for Meta?
AMD is up about 1%. Up about 1%. Here's what Microsoft said on the press release. We are only at the beginning phases of AI diffusion, and already Microsoft has built an AI business that is larger than some of our biggest franchises. We are pushing the frontier across our entire AI stack to drive new value for our customers and partners. Microsoft Cloud revenue crossed 50 billion this quarter, reflecting strong demand for our portfolio of services. We exceeded expectations across revenue, operating income, and earnings per share. I don't know why Microsoft's down. Like, I have zero clue why Microsoft's down. But looks like the streets.
It might recover on the earnings call. Similarly with Meta. Meta may be up right now, but things can switch as Zuckerberg begins the call. So
Good morning. Good afternoon.
Let's ask that question to everybody. Do we think Meta dumps on the call, or does Zuck pull it off? What do people think? What do you guys think?
Pulls it off.
Sam, what are you thinking?
I mean, if it was going to dump, it would have stayed dumping now. They don't really.
What if on the call he doesn't really? That's what happened last time, right?
No, they're going to ask him like what the CapEx is for, and as Jose said, if he says that it's for like renting out compute, I don't think shareholders are going to like that. I don't want him to do that. I don't want him to go out there and start renting out compute. I want it to be used solely for their core business and advertising. And look, it's up 5% now. So I think it's going to stay this way. Microsoft, I mean, yeah, the guidance is going to come out during the earnings. So like this.
Sam, I got a headline from Microsoft. I got a headline, by the way. Sipping Anejo, thank you for the $20 super chat. Great job on the earnings reporting team. I appreciate it. Thank you all for being here. 45% of commercial RPO is OpenAI.
Well, there you go. That's why it's down.
That's why it's down. Of course, this is why the stock, I'd rather they had not given that type of RPO number versus say it's from OpenAI.
Yeah, but why? Like,
Because
why would you
OpenAI
rather it not go up by 45%?
Because Brad Gerstner went on CNBC today and said Sam Altman was cajoling the market into thinking that they're going to spend all this CapEx, which basically means he was lying. And how the hell does anyone believe they're going to spend $300 billion with Oracle or Microsoft?
But I think with Microsoft, it's a little bit different, right? Because if OpenAI goes down, Microsoft doesn't, they keep all the research of it. So they can still run it on their co-pilots. They still will be able to see that kind of influx from that technology. So I feel like OpenAI on Microsoft is a little bit different than OpenAI on Oracle or all these other players, because at the end of the day, they own a lot of that research.
I agree with that. I think it's way different for Microsoft versus Oracle. And I don't think this is a bearish thing for Microsoft. It's just, it explains why the stock is down now.
Yeah.
Meta 701.27.
It's halfway through the last earnings gap down. So last time we were at 760, it dropped, and now we're at 700. So almost halfway there, which I think, again, the call, like Sam said, it doesn't really matter that much because the results, I mean, the results are just too good for them not to continue to spend like they've just reported. I mean, clearly it's working, so why not?
I'm a pretty happy Meta shareholder seeing this pass above 700. Like, we've been waiting for this for literally 5 months since October, 4 months. I mean, it's been a while. This thing has been in the dumps. Let's get a little bit more coverage. So if we can hold 700 on the call, I'd be happy.
Loss of $6.02 billion on $955 million in sales. That is a bigger loss than anticipated. And I want to flag a disclosure that Meta made after the trial against Meta and YouTube started in Los Angeles yesterday. The company is saying, quote, "We continue to monitor legal and regulatory headwinds in the EU and the US." Going on to say, "We continue to see scrutiny on youth-related issues and have a number of trials scheduled for this year in the U.S., which may ultimately result in a material loss." Melissa, back over to you.
All right.
So same stuff on Reality Labs. ServiceNow, let's get some quick coverage on that. Looks like they had a pretty good quarter. Stock's not reacting too much to that after the bell.
I'll have more from him in just a moment. The stock initially popped when the results came out. Now it's lower, but let me tell you, it's beat on the top and bottom lines, also raised guidance. Q4 revenue, $3.57 billion versus $3.53 expected. EPS, 92 cents versus 88 on the guide. ServiceNow saying subscription revenue will be $3.65 billion to $3.66, well above the $3.58 billion consensus. Now, McDermott told me, and he's on the warpath with his numbers, pointing to ServiceNow's pipeline growth of 25% in Q4. That's those remaining performance obligations, 21% in constant currency. He's also pointing to ServiceNow's AI growth with Now Assist annual contract value more than doubling year over year in the quarter. So McDermott is making the argument to me and to investors here with these results that, hey, I know that there's a narrative that AI is eating software. He says, not us, not ServiceNow. He gave me a lot more details that he's going to share on the call as.
Same argument around software, right? I mean, looks like a pretty damn good quarter, just kind of stuck in that overall narrative.
Why is Palantir down 5%?
After hours or today?
No, today, just the whole day.
Well, why is ServiceNow down 6%? I really do think these SaaS.
Yeah, no, you're right. The software names are just getting wrecked.
Absolutely getting wrecked right here. Julian, thank you for the super chat, man. Appreciate it. Did a meta swing. Thanks for the coverage. Hopefully that meta swing was very profitable for you. I mean, for those that took a swing on meta, 670 right before the bell, 706 right now. I mean, a 5% move, especially with options or if you went heavy with shares, is a big amount. So congrats to everyone.
I hope those weren't, if they're call options, you better hope it sticks because he already tipped you.
Well, yeah, hopefully.
AED to US.
Well, that's what I'm saying. Zuck's just like, this was a silver platter earnings for Zuck's. He just has to finish off the call. That's
also, let's give a little pat on to the back to the people who bought the dip after the earnings bell or after. Okay, I'm going to take this lap.
Wait, hold on. What you got at 640? Like how low did you get?
644.
You actually got 644?
Yeah. And Microsoft.
That's impressive.
Microsoft, here, I'll tell you my Microsoft price as well. Microsoft, I'm not up as much because it's still down.
I have a general question for you all. How are we feeling about the current market, the state of the market? All-time highs for the market, but for many stocks, far from it. Many
449
cheap
on
stocks.
Microsoft.
Not bad.
We're breaking out of the range with Qs. So.
Well, the Qs are getting back to their October levels. I think the broader market's okay, Neil. I don't think there's any recessionary fears yet. The geopolitical stuff, I mean, that stuff seems to not be the biggest issue. The whole Greenland thing that was resolved. And then if these tech companies, I mean, regardless of the stock prices, if they can keep putting up these earnings, I mean, at the end of the day, the market is a reflection of earnings. So I don't think it's crazy frothy. I don't think Meta at 20 times forward earnings, 22 times earnings, NVIDIA at 25 times earnings forward. That's not euphoric to me.
I know we've talked about it, but it still shocks me this past year, Meta did 70 something billion in CapEx. They're saying they're going to do 115 in 2026. So they increased CapEx by about 50% in 1 year. If a company that's just doing ads needs this much compute, how much compute do you think a company like Amazon, like Microsoft, like Google Cloud, that are using it for so many different things are going to need? I think that, oh my God.
What Jose is trying to say is, why isn't NVIDIA $250 by now? I think that's what you're trying to say.
It's so early in the AI market. I'm super excited for this. This is insane.
I'm not saying NVIDIA gets past 250 this year, but it's going to get past 250 this year. Okay. It's just like he said, the big banks are going to need, and investment banks are going to need compute to help with, high frequency trading and AI bots that are buying and selling stocks. Like it's going to fill in every gap. I know that sounds toppy and I'm going to get a bunch of concerns on this, but like for real, we haven't seen a slowdown in any of the cloud compute names. And Nebius and CoreWeave and Azure, AWS, Google Cloud, these are all going to be really, really exciting names, at least for the next, 5+ years.
And we
I
might
think a meta call starting.
Yeah, I'm pulling it up. We also might see a rotation out of some of these small caps into the large caps. And so that could be really good with these tech earnings. All right, let me pull up the call. Give me 1 second. And we are going to get started.
The next Fed chair is going to be Grok. I mean, maybe one day.
Put a bikini on that.
Microsoft starting to sell off
Our
again.
results are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.atmeta.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone. Thanks for joining us. We ended 2025 strong with more than 3.5 billion people now using at least one of our apps every day. That includes more than 2 billion daily actives each on Facebook and WhatsApp, and just shy of that on Instagram. Our business also performed very well thanks to record-breaking holiday demand and AI-driven performance gains. We are now seeing a major AI acceleration. I expect 2026 to be a year where this wave accelerates even further on several fronts. We're starting to see agents really work. This will unlock the ability to build completely new products and transform how we work. In 25, we rebuilt the foundations of our AI program. Over the coming months, we're going to start shipping our new models and products. I expect our first models will be good, but more importantly, will show the rapid trajectory that we're on. And then I expect us to steadily push the frontier over the course of the year as we continue to release new models. I'm very excited about the products that we're building. Our vision is building personal superintelligence. We're starting to see the promise of AI that understands our personal context, including our history, our interests, our content, and our relationships. A lot of what makes agents valuable is the unique context that they can see. And we believe that Meta will be able to provide a uniquely personal experience. We're also working on merging LLMs with the recommendation systems that power Facebook, Instagram, Threads, and our ad system. Our world-class recommendation systems are already driving meaningful growth across our apps and ads business, but we think that the current systems are primitive compared to what will be possible soon. Today, our systems help people stay in touch with friends, understand the world, and find interesting and entertaining content. But soon, we'll be able to understand people's unique personal goals and tailor feeds to show each person content that helps them improve their lives in the ways that they want. This also has implications for commerce. Our ads today help businesses find just the right, very specific people who are interested in their products. New agentic shopping tools will allow people to find just the right, very specific set of products from the businesses in our catalog. We're focused on making these experiences work across both our feeds and across business messaging, significantly increasing the capabilities of WhatsApp over time. New kinds of content will soon be possible as well. People want to express themselves and experience the world in the most immersive and interactive way as possible. We started with text and then moved to photos when we got phones with cameras, and then moved to video when mobile networks got fast enough. Soon, we'll see an explosion of new media formats that are more immersive and interactive and only possible because of advances in AI. Our feeds will become more interactive overall. Today, our apps feel like algorithms that recommend content. Soon, you'll open our apps and you'll have an AI that understands you and also happens to be able to show you great content or even generate great personalized content for you. Glasses are the ultimate incarnation of this vision. They're going to be able to see what you see, hear what you hear, talk to you and help you as you go about your day, and even show you information or generate custom UI right there in your vision. Sales of our glasses more than tripled last year, and we think that they're some of the fastest growing consumer electronics in history. Billions of people wear glasses or contacts for vision correction, and I think that we're at a moment similar to when smartphones arrived, and it was clearly only a matter of time until all those flip phones became smartphones. It's hard to imagine a world in several years where most glasses that people wear aren't AI glasses. For Reality Labs, we are directing most of our investment towards glasses and wearables going forward, while focusing on making Horizon a massive success on mobile and making VR a profitable ecosystem over the coming years. I expect Reality Labs losses this year to be similar to last year, and this will likely be the peak as we start to gradually reduce our losses going forward while continuing to execute on our vision. As we plan for the future, we will continue to invest very significantly in infrastructure to train leading models and deliver personal superintelligence to billions of people and businesses around the world. I recently announced Metacompute with the belief that being the most efficient at how we engineer, invest, and partner to build our infrastructure will become a strategic advantage. Dina Powell-McCormick also joined us as president and vice chairman, and she will lead our efforts to partner with governments, sovereigns, and strategic capital partners to expand our long-term capacity, including ensuring positive economic impact in the communities that we operate in around the world. An important part of Metacompute will be making long-term investments in silicon and energy. We will continue working with key partners while advancing our own silicon program. We're architecting our systems that we can be flexible in the systems that we use, and we expect the cost per gigawatt to decrease significantly over time through optimizing both our technology and supply chain. The last thing that I want to mention is that I think that 2026 is going to be the year that AI starts to dramatically change the way that we work. As we navigate this, our North Star is building the best place for individuals to make a massive impact. So to do this, we're investing in AI native tooling so individuals at Meta can get more done. We're elevating individual contributors and flattening teams. We're starting to see projects that used to require big teams now be accomplished by a single very talented person. I want to make sure that as many of these very talented people as possible choose Meta as the place that they can make the greatest impact, to deliver personalized products to billions of people around the world. And if we do this, then I think that we're going to get a lot more done, and I think it's going to be a lot more fun. All right, that's everything I wanted to cover. This is going to be a big year for delivering personal superintelligence, accelerating our business, building infrastructure for the future, and shaping how our company will work going forward. As always, I am grateful for all of the hard work of our teams and to all of you for being on this journey with us. And now here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our segment results. All comparisons are on a year-over-year basis unless otherwise noted. Our community across the family of apps continues to grow, and we estimate more than 3.5 billion people used at least one of our family of apps on a daily basis in December. Q4 total family of apps revenue was $58.9 billion, up 25% year over year. Q4 family of apps ad revenue was $58.1 billion, up 24%, or 23% on a constant currency basis. In Q4, the total number of ad impressions served across our services increased 18%. Impression growth was healthy across all regions, driven primarily by engagement and user growth, and to a lesser degree, ad load optimizations. The average price per ad increased 6% year over year, benefiting from increased advertiser demand, largely driven by improved ad performance. Family of Apps other revenue was $801 million, up 54%, driven by WhatsApp paid messaging revenue growth, as well as Meta verified subscriptions. Within our Reality Labs segment, Q4 revenue was $955 million, down 12% year over year. As we noted on the last call, the year-over-year decline in Reality Labs revenue is due to us lapping the introduction of Quest 3S in Q4 of 2024, as well as retail partners procuring Quest headsets during the third quarter of 2025 to prepare for the holiday season, which was recorded as revenue in Q3. Moving now to our consolidated results. Q4 total revenue was $59.9 billion, up 24%, or 23% on a constant currency basis. Q4 total expenses were $35.1 billion, up 40% compared to last year. Year-over-year growth was driven primarily by employee compensation expenses, legal expenses, and infrastructure costs. Growth in employee compensation expenses reflects the technical hires we've added this year, particularly AI talent. Legal expense growth was due to both lapping legal accrual reversals in Q4 of 24 and charges recorded in Q4 25. Infrastructure expense growth was driven by higher depreciation, cloud spend, and other operating expenses. We ended Q4 with over 78,800 employees, up 6% year over year, driven by hiring in priority areas of monetization, infrastructure, Meta Superintelligence Labs, as well as regulation and compliance. Fourth quarter operating income was $24.7 billion, representing a 41% operating margin. Q4 interest and other income was $609 million, driven primarily by unrealized gains on our equity investments. Our tax rate for the quarter was 10%, slightly lower than our outlook of 12 to 15% due to the settlement of matters with tax authorities. Net income was $22.8 billion, or $8.88 per share. Capital expenditures, including principal payments on finance leases, were $22.1 billion, driven by investments in data centers, servers, and network infrastructure. Free cash flow was $14.1 billion. We ended the quarter with $81.6 billion in cash and marketable securities and $58.7 billion in debt. Turning now to the business performance. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we're continuing to drive incremental engagement from ranking and product improvements. Instagram Reels had another strong quarter, with watch time up more than 30% year over year in the US. Engagement is benefiting.
That's not me. That is not me. That's them.
Not enough compute.
I think Meta just
Add an extra 10 billion a
On
cafe.
Facebook, video time continued to grow double digits year over year in the US, and we're seeing strong results from our ranking and product efforts on both feed and video surfaces. The optimizations we made in Q4 drove a 7% lift in views of organic feed and video posts on Facebook, resulting in the largest quarterly revenue impact from Facebook product launches in the past 2 years. We're continuing to increase the freshness and originality of content recommendations as well. On Facebook, our systems are surfacing over 25% more Reels published that day than the prior quarter. On Instagram, we grew the prevalence of original content in the US by 10 percentage points in Q4, with 75% of recommendations now coming from original posts. Threads is also seeing strong momentum, again benefiting from recommendation improvements. The optimizations we made in Q4 drove a 20% lift in Threads time spent. Turning to 2026, we see a lot of opportunity to drive additional gains. This includes scaling the complexity and amount of training data we use in our models while continuing to make our systems more responsive to people's real-time interests. We're also focused on incorporating LLMs to understand content more deeply across our platform, which will enable more personalized recommendations. Another big area of investment this year is developing the next generation of our recommendation systems. We have several big bets on this front, including building new model architectures from the ground up that will work on top of LLMs, leveraging the world knowledge and reasoning capabilities of an LLM to better infer people's interests. Beyond improvements
It's not me.
to our recommendation systems, we expect to use the models developed by Meta Superintelligence Labs to deliver compelling and differentiated AI products. One area we're already seeing promise is with AI dubbing of videos into local languages. We are now supporting 9 different languages with hundreds of millions of people watching AI translated videos every day. This is already driving incremental time spent on Instagram, and we plan to launch support for more languages over the course of this year. We are also seeing strong traction with our media creation tools. Nearly 10% of the reels people view each day are now created in our Edits app, almost tripling from last quarter. Within Meta AI, the number of daily actives generating media tripled year over year in Q4. This year, we expect to advance the capabilities of our underlying media generation models and ship new features to further enhance the product experience. Another area we're focused on for Meta AI is personalization. We're seeing in our early testing that personalized responses drive higher levels of engagement, and we expect to significantly advance the personalization of Meta AI this year. This dovetails with our investments in content understanding, which will enable our systems to develop a deeper understanding of each person's interests and preferences, while also identifying the most relevant content across our platform to pull into responses. Turning to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. Here, our focus remains on tuning our systems to identify the right time and place to deliver ads. In some cases, this enables us to grow the overall level of ad load while preserving the user experience. However, an increasingly important part of this work is finding opportunities to drive incremental conversions within the same overall level of ad load by determining when a person is more interested in seeing an ad. In fact, in the second half of 2025, our initiatives on Facebook to redistribute ads across users and sessions delivered a nearly 4 times larger revenue impact than Facebook ad load increases. We also continue to make progress on bringing ads to our newer surfaces. Within Threads, we're beginning to expand ads to all remaining countries this month, including the UK, European Union, and Brazil. On WhatsApp, we expect to complete the rollout of ads and status throughout the year, with the level of ads remaining low in the near term, while we follow our standard approach of optimizing ad formats and performance before ramping inventory. Moving to the second part of increasing monetization efficiency, improving performance for the businesses who use our tools. We're seeing very strong results from the ad performance investments we made throughout 2025, with year-over-year conversion growth accelerating through the fourth quarter. We expect the set of investments we're making in 2026 will enable us to drive further gains as we continue to integrate AI across all layers of the marketing and customer engagement funnel. The first area is our ad system, where we're continuing to scale the complexity and size of our models to better select which ads to show. In Q4, we doubled the number of GPUs we use to train our GEM model for ads ranking. We also adopted a new sequence learning model architecture, which is capable of using longer sequences of user behavior and processing much richer information about each piece of content. The GEM and sequence learning improvements together drove a 3.5% lift in ad clicks on Facebook and a more than 1% gain in conversions on Instagram in Q4. This new sequence learning.
It's not me, guys. It really is them. But this stock's pumping, so
Architecture is significantly more efficient than our prior architectures, which should enable us to further scale up the data, complexity, and compute we use in our future ranking models to deliver performance gains. As we scale up our foundational ads models like GEM, we are also developing more advanced models to use downstream of them at runtime for ads inference. In Q4, we launched a new runtime model across Instagram feed, stories, and reels, resulting in a 3% increase in conversion rates in Q4. We continue to progress on our model unification efforts under Lattice as well. After seeing strong success with the consolidation of Facebook feed and video models in the first half of 2025, in Q4, we consolidated models for Facebook stories and other surfaces into the overall Facebook model. This, along with a series of backend improvements, drove a 12% increase in ads quality. And in 2026, we expect to consolidate more models than we had in the prior 2 years as we continue to evolve our systems towards running a smaller number of highly capable models. Moving to the next area, ads products. We continue investing in ways to help businesses leverage AI to reduce the friction of setting up and optimizing an ad campaign. In Q4, we started testing our Meta AI business assistant with advertisers, which helps with tasks like campaign optimization and account support. In the coming months, we'll make it available to more advertisers so each business has an AI assistant they can chat with that remembers their business's goals and provides personalized recommendations on how to improve performance. Another area we're deploying AI to improve performance is ad creative. The combined revenue run rate of video generation tools hit $10 billion in Q4, with quarter-over-quarter growth outpacing the increase in overall ads revenue by nearly 3 times. We are also seeing very good results from our incremental attribution feature, which optimizes for incremental conversions in real time. Our latest model rollout in Q4 is driving a 24% increase in incremental conversions versus our standard attribution model, and this product has already achieved a multi-billion-dollar annual run rate just 7 months since launching. The last area of our monetization work I'll cover is business messaging, where we're seeing strong momentum across our portfolio of solutions. Click-to-message ads revenue growth accelerated in Q4, with the US up more than 50% year over year, driven by strong adoption of our website-to-message ads, which direct people to a business's website for more information before choosing to launch a chat. Paid messaging within WhatsApp continues to scale as well, crossing a $2 billion annual run rate in Q4. Finally, we're seeing good early traction with our business AIs in Mexico and the Philippines, with over 1 million weekly conversations between people and business AIs now happening on our messaging platforms. This year, we will expand availability of our business AIs to more markets, while also extending their capabilities so they not only answer questions on topics like product availability, but can help people get things done right within WhatsApp. We speak a lot about how AI is improving our products, but I'd like to take a moment to give an update on how it's changing the way we work. Mark mentioned our focus on making Meta a place where individuals can have significant impact. A big focus of this is to enable the adoption and advancement of our AI coding tools, where we're seeing strong momentum. Since the beginning of 2025, we've seen a 30% increase in output per engineer, with the majority of that growth coming from the adoption of agentic coding, which saw a big jump in Q4. We're seeing even stronger gains with power users of AI coding tools, whose output has increased 80% year over year. We expect this growth to accelerate through the next half. Next, I would like to discuss our approach to capital allocation. We have significant opportunities to improve our core business in 2026. We plan to continue to prioritize investing in the business to support these opportunities, while also positioning us for an entirely new and exciting product cycle over the coming years, powered by our AI models. Procuring sufficient infrastructure capacity is central to these initiatives, and we're working to meet our silicon needs by deploying a variety of chips that optimally support each of our different workloads. To that end, in Q4, we extended our Andromeda ads retrieval engine so it can now run on NVIDIA, AMD, and MTIA. This, along with model innovations, enabled us to nearly triple Andromeda's compute efficiency. In Q1, we will extend our MTIA program to support our core ranking and recommendation training workloads, in addition to the inference workloads it currently runs. More broadly, as we invest in infrastructure to meet our business needs, we continue to prioritize maintaining long-term flexibility so we can adapt to how the market develops. We're doing so in several ways, including changing how we develop data center sites, establishing strategic partnerships, contracting cloud capacity, and establishing new ownership structures for some of our large data center sites. We have a strong net cash balance and expect our business will continue to generate sufficient cash to fund our infrastructure investments in 2026, which is reflected in our expectations. Nonetheless, we will continue to look for opportunities to periodically supplement our strong operating cash flow with prudent amounts of cost-efficient external financing, which may lead us to eventually maintain a positive net debt balance. Moving to our financial outlook, we expect our first quarter 2026 total revenue to be in the range of $53.5 to $56.5 billion. Our guidance assumes foreign currency is an approximately 4% tailwind to year-over-year total revenue growth based on current exchange rates. Turning to the expense and CapEx outlooks, we expect full year 2026 total expenses to be in the range of $162 to $169 billion. The majority of expense growth will be driven by infrastructure costs, which includes third-party cloud spend, higher depreciation, and higher infrastructure operating expenses. The second largest contributor to total expense growth is employee compensation driven by investments in technical talent. This includes 2026 hires to support our priority areas, particularly AI, as well as a full year of expenses from 2025 hires. At a segment level, we expect expense growth to be driven by the family of apps, with Reality Labs operating losses remaining similar to 2025 levels. We anticipate 2026 capital expenditures, including principal payments on finance leases, to be in the range of $115 to $135 billion, with year-over-year growth driven by increased investment to support our Meta Superintelligence Labs efforts and core business. Despite the meaningful step up in infrastructure investment, in 2026, we expect to deliver operating income that is above 2025 operating income. Absent any changes to our tax landscape, we expect our full year 2026 tax rate to be 13 to 16%. Finally, we recently aligned with the European Commission on further changes to our less personalized ads offering, which we will begin rolling out this quarter. However, we continue to monitor legal and regulatory headwinds in the EU and the US that could significantly impact our business and financial results. For example, we continue to see scrutiny on youth-related issues and have a number of trials scheduled for this year in the US, which may ultimately result in a material loss. In closing, 2025 was another strong year for our company. The investments we've made to improve our business are continuing to drive strong growth, and we have an exciting roadmap this year to deliver new experiences and services for our global community. As always, thank you to our teams for their hard work and commitment to our mission. With that, Krista, let's open up the call for questions.
All right, Q&A.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press *1 on your touch-tone phone. To withdraw your question, again, press *1. Please limit yourself to one question. Please pick up your handset before asking your question to